Hi guys, I'm Dan, this is Kai, we are the directors at Crescent Mortgages. Today we are telling you a bit more about fixed rates which are reducing. So at time of filming, yeah, I know.
Okay.
It looks like they peaked. It looks like they peaked towards the end of last year, which was a bit scary. They're still quite high, but they are reducing. So we just want to give you a bit more info about that, kind of explain where rates are now, where they might be going, which might hopefully reassure some people that they can maybe start to kind of look at taking out a mortgage again, which maybe kind of was put on hold with rates as high as they were. Before we jump into it, just to remind you that we're mortgage brokers, we're not YouTubers. So as always, if you have any questions or you want to run your circumstances past us, you can contact us, we'll talk through everything. It's completely free and we'll obviously be able to tailor the advice to your circumstances rather than what we're covering in the videos, which is obviously a little bit more generic. Let's jump into it. So guys, it's the news we've all been waiting for. Tell them.
Fixed rates are still reducing?
Yeah, fixed rates are coming down. Rates were creeping up last year, base rate was coming up, and then obviously following the mini budget, there were forecasts that the Bank of England base rate would peak very, very high in 2023. In response to that, lenders hiked their fixed rates up quite significantly. Maybe they went kind of a little bit overkill because they just didn't know what was going to happen. We're in a strange situation at the moment. We did touch on this in our fixed versus variable video, if you want to check that out. Variable rates and the Bank of England base rate are still going up. So we have to stress that if you go for a variable rate or if you're sat on a variable rate that follows the Bank of England base rate, which most of them loosely do, rates are still climbing and they're expected to, in fact, to be fair, there's a vote on the day of filming, so it's probably going to go up again today, maybe 5 minutes ago.
The vote's now,
Variable rates are still going up, potentially going to peak maybe later this year in 2023, but fixed rates are coming down. So it looks like they peaked maybe kind of October, November of last year, 2022. The reason that they're coming down now is because the forecast for the Bank of England base rate aren't expecting it to peak as high as was once thought a few months ago. So now fixed rates are starting to creep down, which obviously is very, very, the majority of people will opt for a fixed rate, fixed deal on their mortgage. So it's very, very welcome for us and for our clients, isn't it?
Yeah, having lower rates available is never a bad thing.
Yeah. Now, in terms of kind of where things are going, so at time of filming, start of February 2023, fixed rates are still coming down. So kind of every day, every week, lenders are sending an email to say, new products are being released, rates are dropping, which is great. We don't know how quickly they're going to continue to drop, and we don't know kind of where they're going to, finally end up kind of sitting steady. But I guess one thing to mention is that if you've been hoping to apply for your mortgage or hoping to start looking for a property or potentially apply for your remortgage, don't let the fact that rates are continuing to reduce necessarily stop you from kind of getting the process underway. Because we have to stress that, the process from applying for a mortgage, let's say you're buying a property, to actually getting the keys and moving in, that often takes, what do you think on average? 4 months,
at the moment,
more or less?
It's down to about 4 months. So earlier or late last year, it was 5 months. So
yeah,
about 4 months now.
Yeah, and obviously that varies. The mortgage will we agree quicker than that, but the legal work obviously takes a while, has to run its course. If you deal with a broker such as ourselves, we will be able to carry out rate checks for you across the market throughout the process. So if you apply for a rate now, and then in 3 months' time, you still hadn't got the keys, which is normal, and rates have come down further, we'll be able to shop around and move you over to a new rate, which hopefully will be with the same lender to avoid having to go through a new application. But absolute worst case, if other lenders are better, we can obviously reapply for a better rate elsewhere. So you're not tied and committed at point of application. There is still flexibility after that.
Yeah, and I'd probably just add in for those of you that are maybe remortgaging and looking at this, you can start remortgages, 6, 7 months early. And again, I've definitely spoken to people that have been trying to put it off. Similar concept, that there's no rationale really to putting it off. You can secure, in theory, your worst case scenario today, and then ideally it will get better. Worst case, it doesn't get better, and at least you've got this.
You've got it. It's a kind of, the earlier you apply, it's kind of like an insurance policy. Yeah. Because you're guaranteed that rate at the very minimum, but if rates drop down, you can obviously change to a lower rate. And
important to note that the reason we're telling you can change rate later is because most products don't come with committed fees. You're not paying a fee, or there's not a fee to leave after the application process for most products.
Yeah, which are the ones that we would try and encourage you to take and advise you to take, providing that you're eligible, which you probably will be. Most lenders don't tie you in with any kind of upfront booking fees. Probably got a little bit ahead of ourselves there, but in terms of the actual difference in interest rate, so really hard in a video like this to tell you exactly what interest rates you'll be looking at now. Number one, because this is time of filming. If you watch this video in a few months' time, market may have changed, and also it will be very tailored to your circumstances. If you're putting down a bigger deposit or you're remortgaging and you've got more equity in the property, you will be eligible for better rates than if you've got a smaller deposit or less equity. But on average, a couple of months ago, rates peaked. They're on average were around 6%, weren't they, give or take? Maybe some, and many were even higher than that.
Yeah.
Whereas now, I think we've used an example of if you had a 15% deposit, then actually interest rates are what, sat just under 5%, do you think?
Yeah, for a lot of people.
Late fours?
Yeah, late fours for certainly for the shorter term fixes.
Yeah.
And that's what, I mean, there would have been over 6, so you're looking at more than a 1% drop.
Within a couple of months,
roughly.
Which is obviously quite an aggressive drop. Just to highlight that if you had a bigger deposit or more equity, you know, if you've got 25% or 40% is generally where you're eligible for the best rates, then obviously those rates will be even lower than the ones we just touched on, but we've just used kind of 15% deposit or equity as an example, which equates to 85% loan to value, which you'll understand if you've seen our loan to value video. One thing we do need to highlight, and again, this will be very much tailored to your circumstances, the length fixed scheme that you go for. So the two most common are a 2-year fix or a 5-year fix. Some lenders offer a 3-year fix, and some lenders will offer kind of longer than a 5-year fix. There's a risk with the longer schemes at the moment, so a 5-year fix, a 7-year fix, a 10-year fix, which is that they are lower at the moment, aren't they?
They are, yeah, and that's unusual. Normally, I say normally as in the last 15 years, you pay for the security, you pay for the extra, 5-year, 7-year, 10-year, whatever the rate may be. But given the potential forecast and the fact that rates look like they're coming down and the base rate's close to its peak, which it means at some point it needs to come down, people are expecting rates to be lower maybe in a couple of years. Now that may be completely different by the time you listen to this video. It might be different by the time we actually get there. There's a lot of possibilities there, but if they are lower in 2 years' time, from the bank's perspective, if you're on a 5-year fixed rate, whilst you get a lower payment for a couple of years potentially versus the shorter 2-year product, you might then be paying for it in years 3, 4, and 5.
Yeah,
and that's the logic. For the lower.
And it's just a theory. We don't know exactly what kind of conversations the lenders have, but ultimately, if they're offering you a better rate for a longer scheme, it suggests that they want to tie you in on that rate for as long as possible, which suggests that perhaps they do think, like Kai says, that the rates are going to come down. The rates we gave you a moment ago, so for 15% deposit, that was a 2-year example of a 2-year fix. And the best rates, again, at the time of filming, kind of the late 4s, kind of 4.9 maybe. Again, by the time you watch this video, they might be a little bit lower than that. If we compare that to a 5-year fix, on average, at the moment, they're about 0.4% lower than a 2-year fix. So nearly 0.5% lower, which is attractive. And, if you look online, because kind of comparison tools will often show you the lower rates. And again, we're not talking about variable rates, which is a whole different conversation. Yeah. But if they show you the lowest fixed rates, they're likely to show you 5-year fixed rates because they are lower at the moment. So they may be closer to the 15% deposit or equity, closer to 4.5%, give or take. As much as that does seem more attractive because it's a lower rate, you have to remember, as Kai did touch on, you are going to be generally fixed and tied into that scheme for the full duration. So for 5 years. So you're going to be on that rate, and even if fixed rates continue to drop over the next few years, unless you pay quite a substantial fee, you're not going to be able to shop around and move over to a lower rate. So we're finding at the moment that 2-year fixed schemes are more popular, even though the rate is higher. Sounds a bit kind of counterproductive, but for the reasons we've just touched on, it makes more sense for a lot of people, but that doesn't necessarily mean it makes sense for you. If you want long-term stability, of course, we can look at 5-year fixes, and there's no guarantee what's going to happen over the next few years. Obviously, if something unexpected happens, rates could kind of come up or fluctuate. So with any decision you make, there is obviously always some element of risk.
I think the point at the end there, and you definitely covered it, is how individual it is to each person still.
Yeah.
Fixed rates reducing, and that's a great thing. And should you wait or should you not? You probably shouldn't wait. Probably. There are worlds where maybe some people do, but you probably shouldn't. If you think you should.
Do you mean wait to move forward to the mortgage
Yeah,
transaction?
yeah, potentially. You know, if you wanted to buy next year rather than this year for other reasons, but the mortgage itself, the mortgage rates, you would argue maybe aren't a reason to pause now, I suppose.
Yeah, I mean, don't get me wrong. If you wait, obviously there is a possibility that rates will be lower, but it's just a lot of guesswork. You know, if you say, right, rates are going down, I think I'm going to wait a year where they'll be even lower. Obviously, there's no guarantee. They could plateau at some point, or house prices could go up, which will then offset the savings. So that's a personal decision. That is a personal decision. But you know, the point we're making is that if you apply, you know, if you were going to be moving in the near future, you will be able to reassess the market throughout the mortgage application, which will take several months, and you're ultimately not committed until you complete right at the end of the process.
And yeah, the point I was going to make was that you should just reach out, even if you think you should wait or not. Just check.
Yeah,
just check. It takes 5 minutes to pick up the phone or drop an email and say, "This is my plan. Does that make sense to you?" And we could probably tell you if there's a version of waiting does make sense. Not for most, it probably doesn't, but
yeah, we can talk through the pros and cons, I guess, can't we? Yeah. As we talk, we're completely fee-free, kind of no obligation. So if you just want a casual chat, just to run through your circumstances, just get in touch. Again, you can call us, email, through the website, whatever you choose, and we'll be able to discuss the kind of circumstances specific to you. I think that's everything. So thanks for watching, and we'll see you next time. Thanks a lot.